Hello everyone, this is Evan from the Trade Risk here on Wednesday, April 27th with a market recap video. We're first going to analyze the current market environment. We're going to look at some other markets, sector analysis, individual names, and then finish off the video with some trade ideas. So let's jump right into it today with the Sp500 Spy Etf that closed up 21 basis points on the day. You can see here we did open slightly lower this morning. We tried to probe lower. Ultimately though, that did reverse. We had the FOMC minutes out in the afternoon. We were also coming off the heels of some terrible earnings releases yesterday from some big cap companies, Apple namely, Chipotle, Twitter, amongst others, and we did have a few mixed in good reports in there. So let's take a look at where we came from. We started the week off right here on this bar. This was Monday's action, and you can see we tried to pierce and break below and continue this sort of pullback here off of Friday's session, but bears ultimately failed to hold those lows, and we did end up closing at the highs of the day. I think that was a small clue right there that the bears did fail to hold below 208, and we had some signs of evidence from buyers around here. Of course, yesterday was basically a nothing day. It was a wait and see day, very indecisive candle, and then today still not a lot of movement. These ranges are getting pretty tight here intraday, but we did close near the highs again, reiterating that we did sort of reverse off the down levels that we opened this morning. So really not much has changed from a technical perspective, and really nothing much has changed from the past several weeks. We continue to grind higher in this very lackluster trend, yet the bulls are just kind of consolidating sideways and then grinding out new highs. So that really hasn't changed. The story really is just moving up your trailing stops and the levels that the market continues to break above. I think 207 right now is what you should be using, or if you want to be a little bit tighter, the lows from this week, from Monday, right around 207.50. I think those are levels where if you see them broken, you could start to get a little more neutral, cautious, concerned, whatever your strategy is. But really, nothing else has changed. We're about 2% away from the all-time highs in the S&P 500. There's a load of supply here going back for the past 18 to 24 months in the S&P 500 around these levels. So everybody's waiting to see, do we hit those new highs? Do we get to new S&P 500 highs? Do we break through them? Do we roll over? Do we just continue the grind? And that's all yet to be seen. We're at the end of April. Of course, sell in May. The old adage will be very quickly coming across all of the blogs and media. So keep that in mind as we sort of go through this earnings season. So really, again, not much has changed here. Sound like a broken record. All these videos kind of reiterating the same stance on the markets. I think you need to be bullish. You can be cautiously bullish, but you shouldn't be fighting anything because you really just don't have much reason to. Perhaps momentum slowing. I don't see that as a reason enough to try and short this market, though. And the divergences are there; they exist. But until you see price action confirm it, you're just asking to sort of average, just cause headaches for yourself. So, we're still lightly playing it long. We have been rotating around. We've actually been finding a lot of success in exposure away from equity markets. We'll talk about that in just a little bit. Let's look at the IWM. This is certainly the bright spot. Small caps continue to have a little more life. They're trending higher, more cleanly, still consolidating sideways and then lifting higher, rising above. Trading above the rising 8-period EMA. That's a sign of strength. Small caps, very constructive. The Qs, on the other hand, are doing the exact opposite. They're breaking down. They're breaking through support levels. We get a little bit of a hammer-ish type of candle with today's session, but after losing 108.50, this was really your top tier level up here, right above 110. Then you had about 108, and now we're below both of those, and you can see the fast moving averages curling over pretty quickly. That's due mostly in part by Apple, Google, Netflix, all of those big cap tech names have been getting beaten up off their earnings releases. After the bell today, we have Facebook. As I look up on my screen, it does look to be trading higher. We'll talk about that in a little bit. So Qs, that's your cause for concern. I think you want to stay in the IWM. You want to stay in some other sectors. Let's talk about those sectors. Let's talk about the other markets first. TLT catching a little bit of bid here, right where you would expect it to be, bulls to be showing up, right where this prior pivot low is, almost tested it or undercut it just by a few pennies. So we're getting a little bit of lift here. Let's see if it can materialize into a meaningful bounce or if this is just more sideways and eventually a rollover. I think you need to be a little bit more concerned about TLT. We've been optimistic in this market for quite some time, but especially since this day right here, the 20th, I think that was a day to take notice. And now sort of the tune has changed here. Fast moving averages rolling over. Let's move into metals now. Gold, pretty much doing nothing, just sideways consolidating. This is what it was doing last time we talked about it. 115.50, 121. That's what you should be watching. Silver, more of the same, although it's certainly holding a hell of a lot more pent up. Still letting the moving averages catch up from this explosive move in here from a couple weeks ago on Tuesday. So let this move sideways, consolidate a little bit. But right now, certainly the bulls are in control here. We are no longer in our silver trade. We exited, towards these highs back here last week. USO, this is a market, though, that we did get involved in. And we got back involved in this yesterday, as it so happens, Tuesday, right here as this started to make a new closing high and starting to clear above this resistance after this nice little fake out, shakeout bar here on Monday. So we enjoyed a nice 3% gain in USO. We're looking for a little bit more, probably a retest of maybe 1142, which was the highs here back from January, late December. That's what we're looking for. We're in this, we're long it, and looking for a little bit more. DBC, along the same note, we're still long here. We got involved in this one right here after this little breakdown failure. We've captured a nice move in this. We're looking for a little bit more. We've taken half of our profits off, but this extended nicely today for DBC. So as a reminder, again, if you guys are interested in trade alerts, then that's something we do offer. We've had a great April, mostly off commodity plays like silver, oil, DBC. And we found a lot of success there. UNG, let's talk about that next. You can see closed red on the day, couldn't quite hold up. We're long UNG as well. We want to see this gap hold. You can see it basically retested there, and I like the thrust off of it into the afternoon session. It couldn't get back above $7, but I think as long as these lows hold, I think that can be a tight stop loss to use. That's more or less what we're going to be using. If it starts to get back into this old range, then I really don't want to own this, but it's trying to hold on to the 20 period EMA. Let's see if it can do that. Finally, US dollar, let's talk about that. That's just moving sideways here. It looked good last Friday right here on this closing weekly close, closing on the highs of the week above some of this recent supply, but then it gave it all back and came right back down here. So looks vulnerable once again. So keep an eye on the dollar index, especially the next few days into the close of the week. Now, looking at some sector analysis, a lot of sectors are working. Energy certainly still the standout. A ton of these names are still showing up on my scans, and a ton of them still look pretty good. As much as XLE has run, there still looks to be new setups emerging under the surface here every time I look, every day that I scan. So still looks good here on energy. It certainly is extended, but I wouldn't doubt if it continues to just keep that momentum pent up. XLI, fresh highs here as well. This looks pretty good. Coming into a big level. These are the all-time highs in the industrials, right around 57.50 made last year. Keep an eye on that. Materials also doing exceptionally well. These continue to extend higher. This took out resistance at $46 and just really didn't look back. Financials continue to act well. There's a lot of sectors acting well. I think that's very encouraging. Breadth has been strong. We've been talking about that every morning in our daily market analysis with members. So, breadth looks good, and we're seeing a lot of sectors participate. I'd say healthcare probably still a little bit weak coming off, still above the 8-period EMA, so you can't really complain, but it is pulling back just a little bit. Utilities recovering after this big, kind of 2-day shakeout here, or potentially, shakeout, reversal of trend, depends on how that really, how that develops over the next couple of weeks. And the staples a little weaker as well, same 2-day selling sort of parade that happened just last week. So getting into some individual names, let's start with Apple. We discussed this a little bit. We said $100 going into earnings, that'd be a round number to keep an eye on, and then really the lows down here around 93.50 or so. The reaction certainly negative in Apple. I'd have to expect that these lows would want to get tested, although with today's action closing on the highs, maybe this is some type of higher low that's going to get put in off of versus these sort of February lows. We'll have to see. Certainly just needs time. I would never jump into these earnings plays right away. Let's see how this develops. Let these moving averages catch up. But Apple short term is broken. Google feeling some of that pain, although you can see the nice tail down here, trying to find some support down where it did back in February and March. That's slightly constructive. Let's move right into Facebook. That's reporting now after hours, and if I look at my other screen here, looks to be trading right near all-time highs. Actually, yeah, TC2000's got it here. 116 is the print. So very close to previous all-time highs. You can see here it's trying to reclaim this trend line here. Basically did. Getting back involved there. We'll close that out. So things look good here. Again, just as you don't want to chase Apple on the downside or dip by it, you want to just stay patient here. Let's see how it acts tomorrow. See where it fills in here, and then maybe Facebook we get a fresh trade after some sideways action, above these prior highs. But Facebook certainly looks good. Twitter, horrible announcement out yesterday. It's down 16%, taking out all of these previous key levels. I think this is pretty much garbage again, below 1550. You do have this low down here to work against. Maybe we have some type of double bottom. If this $14 level can hold, maybe we need to undercut it. We'll see, but there's a lot of trap supply in here, so we want to see how this acts in the next few days. But so far, closing on the lows. Twitter doesn't look so hot. GoPro, this one's still just doing its thing. Had a big shakeout here last week, 8% down day, and now it's trying to recover a little bit of it. Keep that one on watch. Tesla, discuss that. Really needs to get back above this 256, 260 level. That would get things a little more interesting. Finally, Alibaba. This one's starting to roll over just a bit. Tried to hold above that $80 level. Couldn't quite do it. It's below it. Fast moving average is trying to curl over. So let's see if it gets back above 79, 80 bucks. I think that's when it gets interesting once again. Now, if we look at some setups heading into the end of the week, BBBY, I think I've discussed this one, posted this one a couple of times. I like the setup here, especially this little shakeout. I mean, I really liked it here on this day. I think this was actually earnings day for it. And if it were to hold here, I really liked it. I liked the tight pattern, but ultimately that failed, undercut all of this previous support level, and now it only spent about a week or so underneath there, and now it's poking its head back up. So a lot of people probably shaken out right here, which leads me to believe that this might have some merit in this bounce here. So keep an eye on BBBY. LM. This one looking pretty good. You're going to have to check the earnings on this one. I'm pretty sure I passed on it because it's reporting soon. Hell, it might even be reporting tomorrow. This one came up in my scan today. I really like the setup here. You can see why. Get back above today's highs. I like that one. Priceline. Discussed this one. I really like this one. This one's got earnings coming up in about a week or so. Monthly chart, you can see clearing out all of some important previous levels. Down to the daily chart, which has a nice actionable pattern in it as well. Again, you have earnings coming up there. MDT, this one has been on the run recently, taking out some very, very important supply up here, making new all-time highs for going back since 2015, where it's continued to fail right around the 78.50 level. And then finally, LNG, really like the setup here as well. Nice little inverted head and shoulders, whatever you want to call it. Unfortunately, this one does have earnings as well, but maybe a measured move could take you higher if it does have favorable results. Keep an eye on that, but this resistance level right around 39 going all the way back to late December is pretty actionable as it's made that move today. So that's all I have for you. I hope that helps. As always, thank you for watching, and I will catch you guys next time.